to episode 4 of the series. By now you know the basics of trading, how to read a candle, how to identify market trends, and support and resistance. Now today we're going to get into kind of the first part of our strategy, the breakout strategy, and it's how to identify breakouts and how to know what trades you should get in and what trades you should hold off on. Right here we're looking at a zone that's already drawn up. If you don't really know what's going on here, I'd highly recommend going and watching the last video, basically how to identify support and resistance. But basically, after we have our support and our resistance areas marked up here, we're going to be looking for clean breakouts. Okay, now what does that mean? A clean breakout is basically what it sounds like. When a candle is moving in a certain direction, breaking out of the support resistance with a lot of volume. That's the biggest thing with our strategy, is you need volume in order to trade it. It's the reason we only trade at market open till latest 10:30, which is an hour into market open. But looking at this chart, right? Just imagine this data is not here yet, okay? So what we'd be looking at is up to here. This is to 925. So what's going through my head in this situation right here, right? Because it's this close to our support zone at this time, what I would need to see in order to get into this trade on a sell is a rejection to the upside. Now, that's what we had right here on this day. It's not a big rejection by any means, but what it did was it came up here, wicked out this area, flipped bearish, and pushed down, right? Guys, real quick, while editing this video, I do realize I jumped the gun on this next part a little bit, talking about early entries and stuff like that. The biggest thing you need to get out of this video for breakouts is with your support and resistance, say on a sell position, when there's a bullish candle up, there's a rejection to the upside, and it flips bearish, pushes down, and breaks your support line. That's a good confluence that it's gonna be a sell position, right? If market opens, it pushes up, it wicks out an area, pushes straight down, and breaks through your support line, okay? And it's just the opposite for a buy position. If you think it's gonna be a buy, it starts coming down at market open, wicks out that area, pushes back up, breaks through your resistance zone. When it breaks out, it's how simple this strategy is. It's called a breakout strategy because when it breaks out through that line, that's when you enter. Because it did this, I did feel very confident in this trade again with the Discord. But it allowed us to actually get into this trade a little bit earlier than we normally would, right? So when it wicked out this area, I was comfortable getting in this trade right around here, right? It is a little before our breakout line here, but right when this candle flipped bearish, I was comfortable getting in because again, market open, came up, wicked out this area, flipped bearish, and it was continuing down, okay? So if you're looking at this, again, and you even want to be a little more careful with these trades, right? You don't have to get into them earlier. You can wait till you're comfortable, but at the same time, you being comfortable can't mean the candle is down to here and then you want to enter the trade. That's FOMO, fear of missing out, and you're getting into the trade way too late at that point, right? I would say the latest you get into this trade specifically is pushing past these wicks right here, our normal 30-point stop loss, right? Drag this back up. Still could have hit a 1 to 2, played it a little safer, and still taking your profits. But when you draw up these zones like this, again, you cannot wait too late to get into these trades. So us specifically in the Discord, we will not take a trade before 9:31. It doesn't matter what the market's doing at that point. We won't enter into a sell before 9:31. We won't enter into a buy until about 9:31:30 to 9:32. With a lot of back testing and a lot of research done, before these times, it has really big probability to just wick out an area and reject, and then you just your stop loss would get hit way too quick. With these rules set in place, obviously make your own rules, but with these rules set in place, it's a lot better to miss out on a couple trades here and there than being stopped out all the time. For our second example here, we're going to come over to S30, and it basically did the same exact thing that our NASDAQ trade just did, right? So basically, this is the 925 open, all right? 930 candle right here. So 925 open, again, this is all from here to the left is the only information we had. We marked up our support and our resistance. At market open, the candle was bullish. It came up here, it left this wick. It wicked out this whole area, okay? It flipped bearish, pushed past this wick with strong volume, and continued down. It's very simple, right? And again, the reason we're looking for this wick is because of how close this candle, this 925 candle is to our support zone, right? Basically, if this trade had just came down and then 930 open, it's 931 in 1 second, right? And it just keeps pushing down. We wouldn't feel comfortable getting into that because, again, of the amount of times that we've seen that it's just wicked out a certain area and rejected, okay? So basically, like I said here, it's the same thing again. 925, 930 open, pushes up, wicks out this area, rejects, flips bearish, and pushes down. In this situation, I would enter this trade right around here. Once it has a strong push past this wick, again, you would be completely fine entering this trade past these wicks, past your support zone, and still, targeting your normal 1 to 2, 1 to 3, whatever your rules are saying. All right, in this next situation, we're gonna go over a buy position. So right here, this 925 candle, we're in replay mode this time. But this 925 candle already started to push down and break our support and retrace back up a little bit. So in this situation, we would just kind of, wait for the market to play out a little bit, see what the market gives us. We play it here for a second. We had a small wick out to the downside and then start to push up and then retraced again. So again, we'll just see, what would happen here. I have told you it's a buy, but in this situation, a sell wouldn't be bad because of the closure, the push up, the wick out, and then it could flip bearish here. You could enter in a position here and push to the downside. Again, the main concept here for a very strong confluence is a push to one side, wicking out the area, and then pushing to the other side, right? So again, we'll just play it here for a second. Starts to push up. You could enter off this break right here, right? Again, wicks out this area, pushes up, breaks resistance. I would be fine getting in this position right at this break, and then targeting some areas. Okay, we'll go over in just a minute. We'll go over how to find the areas that you want to target to, right? So just let this play out for a second. And there we go. Take profit hit. Again, it was very simple. Came down, wicked out this area, flipped bullish, pushed up, and just had our take profit. So one thing I see all the time with very successful traders is, people always saying that they're getting some sort of like inside information or cheating somehow, because they can get out right when the market flips to the other direction, right? Obviously, this doesn't happen all the time, but for experienced traders, they know certain areas to target. You kind of went over it in the reversal zone video, but that's basically what we target here, right? So if we just use this scroll on the bottom of trading view or whatever you're using and scroll over, we can kind of see these lows here, right? Because this was a sell position, the first one that we went over, we can kind of see these lows, and these lows have come down to this area and flipped quite a few times, right? So we kind of expect that to happen here. So what I do all the time when I'm marking up my charts is I take the rectangle tool and then I just follow these lows over, and I know that we can target this specific area because, again, it is a reversal zone. This is where lows like to target. So I know when I get in, wherever I get in, I can target these areas. And if it was an A+ setup like this was and like these other trades have been, these are the areas it should target. In this specific situation, the trade did break through these previous lows, but for a lot of people would have got stopped out, especially moving yourself to break even and everything like that, because of the fact it is a reversal zone, and it is exactly what happened here. It came down, it barely touched this zone. See, this is like the very top of the reversal zone, and it barely touched this zone, wicked out this area, and pushed up right away. And probably if people were aiming for trying to be greedy in this trade, probably got stopped out because it just pushed straight up off of this zone. A little bit later, it did end up pushing down and breaking through this zone, but that doesn't always happen, especially in the market conditions right now as of March in 2025. Coming back to this buy, there's multiple different things you can target when trading breakouts like this. You can target areas of like small consolidation like this. You can target London session highs and London session lows, and then you can just target those main reversal zones like we just talked about, right? Again, with these market conditions as of right now, the reversal zones are the main things we target because it keeps continuously happening, right? So in this situation, I'd probably just target this little consolidation area right here. So that's going to be the end of this one. I do understand that in these certain situations, these videos can seem all over the place, are hard to grasp. I would recommend rewatching certain parts of the video, like going over just the breakouts and the zones that we target and stuff. But if you do need any help, you can always join the Discord in the bio. You have direct access to us. You can get one-on-one coaching calls with us for completely free. We don't charge you a thing. We have nothing to sell on the Discord, so it's only to benefit you, and I would highly recommend it, as well as staying tuned, especially for the finale of this, where we go over the whole strategy completely in depth and show you how we trade every single day.